Hey, everybody, welcome back to the Particle Accelerator, where we talk to future thinking business leaders about how to accelerate their business and grow their team. I'm here today with Chris. Chris, would you please introduce yourself?
My name is Christopher Hussain, and I most recently was the CEO and founder of Realkey. Realkey was a mortgage processing underwriting automation platform. Essentially, what it did was for mortgage professionals, brokers, lenders, banks, credit unions, what we were able to do was take the loan application from whatever system they were using, import that into Realkey, and we had an out-of-the-box solution that utilized an AI processing underwriting engine built in-house. We also built a doc AI engine after going through Google's AI and machine learning cohort, which is a very competitive cohort. It converted the loan application data into a comprehensive requirements list for all the parties involved. What we did was we created the industry's first ever deal room where everybody had one centralized place where they could both store and access documents and data. If you were an insurance company, you would upload the insurance policy there. If you're a real estate agent, title and escrow, or lender, you can all access the latest and greatest purchase agreement. And with the Doc AI, on upload of one document, a combined PDF, or 40 documents in less than 30 seconds, it would recognize what was uploaded automatically, attach it to the right requirement, meaning nobody was manually changing the names or attaching it, which is what a lot of lenders do manually today. They have setup teams that do that. And it would even analyze the data. We built the intelligence onto it where it would even suggest next steps and say, okay, thanks for that upload, but by the way, you triggered another requirement, a lot of explanations, supporting documentation. This is not the latest bank statement or pay stub, or the loan number is wrong and the mortgage clause is wrong on the insurance policy, or it's not got the right coverage. All the crap that you go through on a normal everyday loan, it automated all of that. What's interesting is that we paused the company very recently just because of the challenging investment macroeconomics going on, and specifically around mortgage and real estate. Obviously, it's had probably the most challenging few years the industry's ever seen. And we just looked at the valuations that we're looking at and said, hey, we have a lot going for us and we should be worth a lot more than this. And we have nobody that's trying to do what we're doing or doing anywhere near as well as what we're doing. Let's just take a pause and a break. We may come back to it. We may get acquired. What's interesting is a lot of the conversations I've been having are with companies that are trying to solve for what we already solve for. And it's far more expensive for them to build what we built. It'll take them a minimum of 2 to 3 years and millions of dollars with the right team to build it, or they could just acquire and go to market today. In the meantime, I've been doing a lot of consulting and advising for early stage startups, later stage consulting, whether it be sales, marketing, go-to-market strategies, culture building, operations, fundraising, deal rooms, due diligence, you name it.
Cool. Appreciate that intro. I'd love to get to know you a little bit. The way I typically do that is just, how'd you make your first dollar? Where'd you grow up and how'd you make your first dollar? For me, Pueblo, Colorado, and I had a paper route. What was it for you?
I grew up in Southern California, born and raised in Los Angeles County, specifically Woodland Hills, where I spent my younger years until the '94 earthquake and my house got destroyed. We moved to Calabasas. I remember before Costco was a thing, there was another wholesale seller. There was something called Price Club. My parents would buy pixie sticks and other random candies that kids should not have. And I took them into school and I'd resell them. Or it was things like baseball cards and pogs. I would find them on the cheap and just resell them. Outside of that, I remember going to swim meets too. Family was very heavily into swimming. My godmother taught us how to heat up colored plastics and turn them into earrings and wristbands. I remember just swim meets selling that, selling cards, selling pogs. I would sell whatever I could at the swim meets to make a few extra bucks. It was interesting.
What toy or hobby or part of your upbringing inspired what you do career-wise today?
Interestingly enough, I would have never thought I'd be in FinTech and PropTech, creating software platforms. My original passion was to be a CEO and executive. I could go all the way back into the early 80s. My mom was working for Disney at the studio in Burbank. We got invited to a Christmas party. Michael Eisner came out and ended up stopping by because I was one of the only kids there while they were volunteering. He stopped by and said, hey, what do you want to do when you're old? I'm like, I'm going to have your job. It's like this little brat is going through and saying he wants my job. He's okay. I remember giving him some ideas that actually became the Little Mermaid ride. I gave him the idea for that at the time, and also the Honey, I Shrunk the Audience ride. I gave him all these ideas for these rides, and he actually ended up using them. I still remember to this day that conversation, and my parents do as well. I originally wanted to do film and even got into USC's film school, but I took the wrong English course when I went to Davis. Rather than being a 5-year student, I was already doing business management, entrepreneurship, and marketing, essentially my own degree under managerial economics at Davis. That was because my parents said, if you ever want to do anything artistic, you need to have something grounded that you can fall back on. Getting business administration, marketing, and management is definitely something that applies to just about everything. I ended up interviewing, I went to a career fair and happened to have a mortgage company, AmeriQuest, that the friend that invited me to the career fair, who was a friend of my now wife, she actually was going there for what would have been her last interview. And unfortunately, instead of hiring her, they hired me. It was only because I was cocky enough. Looking back, I was definitely cocky. Everybody should look back at themselves when they were younger and know that they were too young and too immature. I went to that career fair trying to get a job in management, expecting a particular salary base that was definitely unrealistic, and everybody kept laughing at me. When they were done, I was like, "Yay, thanks for coming." The guy with the mortgage company said, "So what'd you think?" Oh, I thought it was garbage. Everybody kept laughing at me and didn't think I had what it takes to be a manager. And so you think you do? We ended up talking for a while. I was like, you know what? I have a whole stack of applications here, and I've got yours. I'm going to put an X on it. I'm going to throw all these in the garbage, and you're going to get a call on Monday. And I want you to pretend like you didn't know that you already got the job, but you had the job. Well, that was how I ended up in the mortgage industry, and eventually that led to where I am today.
Yeah, he liked the bratty kid that would think highly of himself, but also be willing to learn.
Yeah, I was definitely overconfident. Yeah, immaturity for sure. Well, I definitely look at some of the youth today. I think that they have a lot of potential, but at the same time, there's a lot that they have yet to learn. You have to have that willingness to understand you don't know everything, and then surround yourself with people who can help you to not make the same mistakes that maybe they already made and can help you avoid.
Yeah. You've been through multiple business cycles and ventures. What's been the most valuable lesson about knowing when to pivot or move on from a business?
I'd say that's definitely something that I've gotten better over time at. For sure, probably one of the first learnings was going through and working with that company, AmeriQuest, is that I was able to realize sooner than others that what the company was doing was very shady. And I decided to leave that company before the whistle did get blown on them. Many thought that I did it. I definitely did not do it. You'll hear me on a lot of podcasts say that because I was the top originator there for a few months, and it was weird for somebody to be at the top of their game and then all of a sudden leave. It was because I got invited out to their operations, saw what was going on, and didn't like what I saw.
Yeah. I have some really solid guy buddies, Christian buddies that were like countrywide in 2008. But they definitely had a period where they had to go, okay, wait a minute. I knew what I was doing wasn't the right thing. They had to pay a kind of a moral payment in the recovery of the real estate industry because felt it, but didn't. It just seemed they were in it. So I had a couple of buddies kind of had to redefine themselves coming out of the 2008 mortgage crisis. And there was something kind of cleansing about it. Like we were good people trying to do the right thing, but in the wrong industry. Maybe some of them were, maybe we should have blown the whistle. When we're sending title people or whatever, your notary to a hospital room for somebody with a terminal illness to sign a mortgage, maybe we shouldn't have done that.
Yeah, definitely. That was one thing I could say I never did, a reverse mortgage. As soon as I found out it was strictly for the elderly, you look at elderly people, they just, God bless them, they just don't have their shit together all the time. And a lot of them, they're not as smart as we thought they were when we were younger. I think it is predatory. There's still a lot going on, especially with RealKey. We built in a lot of the guidelines. We know the overlays. We know everything that's going in there. There's definitely some very shady products, and especially when the rates went higher, we saw that people were doing more creative financing, coming up with loan programs to help people qualify that just don't qualify unless they go through this particular program. Just be mindful of what you're getting into. Know that if you're not going to have a lot of money at the end of the day by doing a particular loan, maybe you shouldn't be buying the house. Maybe you should continue for a while. That's also the American dream has been oversold.
Being house poor versus being free is the dichotomy there. You could have a beautiful house, but if you can't afford it, then that house is going to own you rather than you own the house. Let me ask you this. After nearly a decade with Realkey, what led to your decision to close? Or maybe I'm assuming you've closed it down. You said pause. Maybe I'm misunderstanding.
Our pause is closed. As of right now, we are not taking any new clients. We have everybody is to be out of the system actually within the next few days at the time of this recording. And so we're not taking any new clients, and we told everybody to be out of the system. We are looking at potential asset sales. We do have some companies circling around a fairly reasonable valuation based off the investment bankers and brokers that we've spoken to. And it seems like everybody's on the same page. At the same time, if we don't find somebody, we're not actively looking for somebody to come acquire us right now. That's not my full-time job at the moment. We will consider when the market returns. And that's really when it comes on investors. There are a lot of investors that focus specifically on FinTech, PropTech, real estate ecosystem investments. And to me, it's like a shame on you. I'm just going to say that openly on the air. Shame on you if you are pulling back on investments at this time. This is when they should be doubling down because they're getting the lowest possible valuations and putting these new technologies in a position to ride the top of the wave. And when you look at finance and the systems being used, they're so far outdated, and the UI UX is just so horrible and atrocious. It's because it is a cyclical industry consistently affected by the greater economy, and investors pull back at those times and move their money elsewhere. If you're focused somewhere, you should continue investing, especially in the down times. You should be doubling down rather than pulling back, in my personal opinion.
Yeah. So how do you mentally and emotionally, like, how are you adjusting from, like you shared with me that you're like on 5 million in ARR, the business is going great. You've spent a lot of time on that business, and then you're going through the wrap up, potential asset sale, and then emerging to do something new. Have you learned anything about yourself or mentally and emotionally about how to handle a transition like that?
The transition's a lot easier when coming off of basically wearing every hat. Fundraising itself is a full-time job. It's 2 jobs. You are doing sales, marketing, outreach, doing due diligence, investor relations, finance, legal, technology, infrastructure, all of it. You're going to events and networking. There's a lot involved with doing that. That's a full-time job. Now you toss on top of that doing sales and marketing and being one of the only growth drivers for the company, plus a central part of product development and also strategy and finance and everything else involved. Wearing all the hats. Just take away the fundraising piece. That's a lot of extra free time that I've just gotten back. So transition.
Yeah, there was a level of relief, I'm sure.
Yeah.
A level of relief. I've had some transition, not necessarily from failure, but just from it didn't work out. And when that decision is made, there is a big relief.
I think that might be part of it, a failure. We are not bankrupting. We are not going through almost all of our investors at the valuations that we would exit at with an asset sale would not only get their money back, in some cases, they would get a return because they invested so early on. The majority of them. It's been so long since we had our last investment, and it's just the market. Again, great product, great traction in a down market, everything with Google AI, ML cohort, et cetera. End of the day, that was why we decided to pause. We're like, look, we're worth more than this, and we can always come back and continue to solve this problem later on. And if we sell to somebody, we want it to be somebody that we know is going to have the capital and resources to really build it towards the vision. And that's really why the company was started. And we focused on the product that we did. We went through a couple pivots, and we came down to this one that we ended up relaunching the company in late 21. Despite the company having been around 10 years, and it was the right product, the right positioning, the right foundation, everything, which is something the industry needs. So see that 10 years from now, everybody's going to be using some level, whether it is Realkey or another version of Realkey. It's something that everybody needs.
You've seen that the mortgage tech space evolved significantly. When you started, it was the right timing, the right product, like you just said. But what surprised you most about how the market developed?
You can maybe clarify on that a little more.
What advice would you give on timing the market right, the importance of market timing versus having the right product, and then balancing that early innovation versus waiting for market readiness? We saw a similar thing with like other service companies, we fortunately in our service company didn't have a customer concentration of VC-backed companies, but some of my peers who were doing software development as a service at scale, they realized all of a sudden that even though they had a venture-backed company in healthcare, the customer concentration in venture-backed all of a sudden emerged. We're sitting in late 2022, 2023, and we're like, wait, all the venture companies are pulling back from any kind of SaaS investments where software was the main driving force. It was something that I don't think anybody really timed. So there's schools of thought around how to time the market, but it's really interesting to me, not that we didn't see it coming, but that all of a sudden we discovered this new customer concentration of being VC backed and how all of a sudden that became a negative where even like a couple years before it was a positive thing. Almost like the market assumed that interest rates would always be zero.
Yeah. To answer your question, you can't predict timing and you shouldn't try to. It's great to try to use the timing to your advantage. If the timing does come to your advantage, it's luck. It's a big part of everything. If everyone had a crystal ball, great. If everybody was the perfect strategist, great. That doesn't really exist. Luck has a big part to do with everything. If you look at some of the major successes, either they came from a place of privilege where they just had naturally all the proper resources and capital they could ever want. I mean, hell, Johnny Ives startup. That's a great example. I had heard about this startup well before it became public. And as soon as I heard of Johnny Ives involved, I'm like, that guy's never going to have a problem raising capital. One of my friends left a very cush job at Apple as a very senior individual. I'm like, wait, you're leaving. Don't you have a kid on the way too? Like, why would you be leaving to join a startup? Are they public? Do they even, wait, this is stealth? Once you don't have Johnny Ives, he's okay. That's not common. Same thing, you look at some of the other successes. Oh, we know the right timing, and then all of a sudden the market hit, and then we exited at the right time. All this went really well for some people. That's not typical. I'd say if you've got an innovative idea and you've tested it out, done your research, go for it. At the end of the day, part of what I do is I go to early stage companies and come in with the lens of an investor. Even if I'm getting paid, I want to make sure that I'm going to help them be successful. And the only way I'm going to help them be successful is if I think they're going to be successful. If I don't think they're going to be successful, I'm going to try to find what are the gaps and can I fill them? And in some cases, I just can't fill certain gaps. Nobody can. Sometimes it's the wrong people doing an amazing idea, or it's amazing people doing the wrong idea. It can be a combination of those things. At the end of the day, I think that's where having the open-mindedness to that possibility and having somebody that's going to give you good, actionable advice, which is also rare. There's so often you get advisors and mentors who are either far removed from the trenches or they come from that place of privilege. They have a hard time communicating properly, or they just don't communicate very well with the founders. They're so specialized. At the end of the day, what helps a founder is somebody who understands and can wear all the hats, who is cross-functional, who understands sales, marketing, operations, technology, product, investment, fundraising, diligence, everything involved in a culture building. I think that's when you're able to really help them divide themselves, come in with the outside perspective and the background of experience and knowledge that they just don't have. And then you're really helping them at that point.
Yeah, a lot comes up for me there. So I think that you're helping describe the profile of the likely to succeed. The profile of the likely to succeed for me is really good at noticing a need, like seeing it when nobody else does. Oh, that needs to be solved. Just like you saw this mortgage industry problem of closing more mortgages faster with streamlined process. And so like that step one is being able to recognize a need. Step two is a violence of action. They use that term in special operations and law enforcement a lot, moving quickly towards it. Whereas most people, when they play dodgeball, will go grab the balls in the center and try to run back. Good dodgeball players will try to get an out at the line. That's violence of action. And then after that is, okay, now you're moving quickly towards your goals, but do you have enough skill? And then if you don't, if you recognize gaps in your skill, I remember one of my early startups, I just didn't have the investor module. I needed to spend time with people who understood how to speak investor. I remember my partner and I were at our first angel meeting giving our pitch, and they asked us what our burn rate was, and we answered with our run rate. So like $100,000 is like, what? You're burning $100,000? That's where guys like you that are willing to coach, like they've been around, they've had to diversify their skill set, is so powerful, because how can you have violence of action if you're missing some tools in the toolbox? And there's so many people that would gladly help you, so many fractional consultants, just helpful people that'll help you round out your skills so you can keep moving forward quickly towards the need that you've identified.
Absolutely. I think that at the end of the day, the pitch is very important. It's more important than most people think, and it's undervalued. A pitch deck should be something that every company should review with the entire team, whether it's a monthly or at minimum bi-monthly, to see if everything that's being said on there from start to end, everybody's nodding their heads and agreeing. It summarizes so much. I do remember the very first pitch I ever did, I was invited by, I'm going to do a name drop here and he's going to thank me, Eric Milken, as a good friend, a Sutter Legal. I recommend him to anybody. He invited me into my very first pitch, and he apparently told the judges to just eat me freaking alive. I've never been shaking more in my life, and I did the worst freaking pitch I've ever done. I definitely scored last, which is funny for those people that know me now, because I've literally won almost every pitch battle out there, from Startup Grind's Global Pitch Battle. I recently won that one. The Global AI Pitch Summit, Alibaba's Global Pitch Battle. You name it, we win pitches. And at the end of the day, pitches vary from whether it's a 30-second pitch, a minute pitch, which is what Startup Grind was, all the way up to doing 15-minute pitches, or you have your half an hour in the Zoom meeting. You have to be very efficient. That's something that you'll find, especially in Silicon Valley. There are a lot of builders that are the CEOs, a lot of engineers. They shouldn't be pitching. Sometimes the initial feedback I give somebody is that you shouldn't be the CEO. You should be building. If you are the person building the product, build the product. Don't go out there and waste your time doing fundraising. You need somebody who's better at sales and marketing, which fundraising is a big part of. It's outreach, it's networking, it's getting someone's attention through marketing, and then pitching them in a short period of time to get them even interested in having a conversation, and past that conversation, getting to diligence. After that, it's getting through and having your deal room. Does your deal room look like amateur hour? I've seen companies come out of Y Combinator, 500 startups and tech stars. I'm like, wait, you guys came out of those companies and this is what your deal room looks like? This is what your deck looks like in your pitches? Like, these are really reputable incubators and accelerators. And unfortunately, I think this is just something of value to bring to them too, is to help them realize that I can make every introduction in the world. You could do a great pitch, but once they get in there, if it's not buttoned up and the investors are not seeing what they would consider a de-risked investment, where you know what you're going to do with the money and what's going to happen, and you have a very good idea of that as best as you can. You don't have a crystal ball for the market and the economy, but at least you know what you're going to be doing. You're organized. So yeah, I think that's something to bring to people. And it does, again, come back to the pitch is a very important piece and should be focused on.
What's the hardest decision you've had to make as a CEO, and how did you approach it?
Oh, there's so many. I couldn't even give you one. I maybe lead the witness here.
A lot of times folks will bring up hardest decision. I remember when we were doing at Legal Inc., my founder had to lay off a family member. I was like, how can I make this easier for you? We were about to get acquired, and it just wasn't going to be a good chemistry. But it was also Q4, which is the hardest time to let go of folks. And yeah, sometimes the hiring and firing can be a hard decision. But he made a huge.
But that's most leaders, forget the CEOs. Managing people is the hardest part of the job. Fundraising is very hard, don't get me wrong, but managing people is so hard. Hiring and firing, hiring the right people the first time is very important. In many cases, that's where having proper resources, capital, or being just able to attract the right talent. At the end of the day, if your culture is around pedigree, but people who lead from the trenches so you can get shit done, I think that is definitely something that I can help people to cheat on right now, is that I've definitely had in my past when I went for the cheapest possible. I tried to do everything overseas and overseas, you end up with burnout. They're building while you're sleeping, which means they're building as interpreted versus as intended. So they're having to do things twice, which means twice as long, not valuing the UI UX as much. And they're just trying to go through and to get through the project. If you hire the right people who are experienced, who are also pedigreed, what happens is that when people look at your company and look at who they might be working with and they are intrigued or impressed, they're like, okay, this is a team that just based off the surface, I'm interested in working with, therefore they're interested in applying and taking more equity because they believe in it. This gets back to that Johnny Ives example. Okay, Johnny Ives is the center. Okay, I see that if I'm at the beginning of this, I'm going to get something out of it. Who else do we? Oh, he brought this person and this person. Okay, the more of those people, and those people all attract each other. If I could get some good examples, that would be it. But getting back to your question, the hardest thing to do is definitely the hiring and firing for sure. The firing, most of the time, it comes down to culture. Fortunately, I've gotten good enough that if I'm involved enough in the hiring, usually we're able to avoid it because I'm really looking for culture more than anything. I start off with the pedigree, but I do end up focusing on, is this somebody I want to go out and have drinks with? Somebody that sees the company as a family. And at the end of the day, especially with the startup, everybody should realize that they're sharing the same food source, the money, the capital, the resources. I find it valuable to be transparent, especially in the early stages, so that everybody knows where every dollar is going, who's getting paid what, and then also they're holding each other accountable and trying to protect the runway at the end of the day because they realize that the runway is what feeds the family and allows everybody to continue building what we're building, and that they're really passionate about solving that problem more than anything.
How do you know the difference between a problem we're solving versus a problem we're solving now?
Problem we're solving versus problem we're solving now. If it's a problem we're solving now, it's hard to distinguish between the two, between you and me. And now, if you do it now, you're going to realize all the pitfalls as you're doing it. It's not like you're going to do it perfect on the first try. So I think that starting sooner to later to solve a problem is very important. Sometimes that is driven by the economy. Can you raise capital? Can you find the right team? And at the end of the day, if you're selling to a market that's not going to have any money for a long period of time, then that might be some of the driving factors. So I think that's when you're saying solve a problem now versus later. We look at COVID, that was very much a now. Didn't matter. We need to go through and we need to solve this problem immediately. Should we do it later? No, we need to do it now. Once we did that, we started looking at other problems. We're like, should we start focusing on bird flu now versus later? Funny thing is Trump just got rid of $700 million in funding from Moderna for the bird flu, for solving for that. It's okay. It's like a kick in the nuts. We just brought all the egg prices down, something that you were promised, and you were going to go through and reward you by taking away the capital. But let's not talk politics on this podcast.
What's been your biggest expensive lesson as an entrepreneur?
Plenty of expensive lessons from failed startups and ventures. Pivots were the difficult choices, especially with Realkey. As a great example is, okay, we built a product that is actually creating revenue. Do we pivot away from it because it's just not the right problem to be solved? Because we look 10 years down the line, is this the problem that was the most important? Or do we have a more important problem and that is really the future of the industry? And I was fortunate to work with some great people. I give a lot of credit because he's the closest thing I had to a co-founder. My brother at Realkey was Alan Tifford, who was the TurboTax design, the Intuit's principal design strategist. And one of the things that he always suggested, and I suggest to anybody, is go find John Cleese's open mode, closed mode speech. Open mode is going through and keeping an open mind, looking at all the possible problems that you could solve for an industry. One of the things we did is you have more industry knowledge than anybody else, and you're going to be able to do really well with this open mode. Let's go through and look at every possible problem that we could solve and consider maybe Realkey should solve any one of these. Let's look at what is the value to those that we're solving for. Is it really that big of a pain point? Is it something they're willing to pay for? Is it have barriers to entry? And we just went through everything. If you look at our Miro board pre-COVID and look at it, we literally had almost like a galaxy. As you zoomed in, you're like, oh my God, there's literally billions of stars in here. And one of the big focuses was we had about 100 ideas. And we went through this process. We came down to what we really wanted to focus on was documents and analyzation, and we figured out that was processing and underwriting. That took us off the original product, which was more focused on loan application. So like, why should we be filling out a loan application when even after filling it out and you say your name is this, your date of birth is this, I work here, I make this much, I need your pay stubs, your ID, and all these documents that are the point of truth. Why can't those eventually fill out the loan application? And then why can't the intelligence figure out? And we just kept going and riffing. Okay, I think now that we've got the idea, now you go into close mode. Once you know what you're doing and you've got your game plan, everybody's fully aligned, then you're honed in. Now, is it perfect? Does it go exactly as planned? No, but it's a lot better than trying to figure it out as you go.
Divergence versus convergence. Diverge to make sure you have the best ideas and holding all ideas as equal. And then once you have a strategy that you feel works, you got to converge on it. You got to go after it.
Absolutely.
What problems are you most excited about tackling next?
Right now, I'm doing advising, consulting, mentoring, assisting on diligence with companies. And I'm definitely looking for some intriguing companies. Is there opportunities for me to join one of them? Does it make sense for me where I see it's going to be an investment for me? Either I am taking it to my market value, but I'd still be wanting to make obviously a fair market rate salary. The equity can offset it. That would be intriguing to me. Or maybe it's going to work for a company that already has proper resources and capital, but is well positioned where I might be able to take some of the ideas and concepts and implement them. At the end of the day, I think that what I'm looking for is where I can build, but have the proper resources and capital to do so.
Yeah, I think that's the dream. How do you evaluate new opportunities now? Have you changed the way you evaluate opportunities?
Absolutely. Going through and doing fundraising and investments, at the end of the day, that's the lens I look at everything as. And so I take a more holistic view of the companies that I might be joining and do a much deeper dive than I would have done previously. I think a lot of people are looking for simply the salaries, and that's great. In some cases, people are meant to go from salary to salary, job to job, and grow within the companies. I'm very fortunate. I have a lot of potential places that I can land. What's intriguing is that they're not all in the mortgage fintech space where I hold the most clout and I have the most connections and can open the most doors and do the most damage immediately. What's intriguing is that as I'm finding a lot of what I've been able to accomplish and learn over the last many years applicable to a number of industries, and I'm able to bring value to those companies. So that's actually been very intriguing to me as well. And it's through connections I've made, pitching, fundraising, going through incubators, accelerators, is that hearing me talk and just interacting with me, I think that's always great for people to realize that they're worth more than they may have thought.
What industries or technologies have your attention for the future?
I don't have any one particular one, to be quite honest. And I try, this would be my advice, is don't get caught up in the latest hype. I remember when blockchain and crypto, everybody was asking us to implement blockchain and crypto into everything we did. And we just said, no, it doesn't make sense. Be able to say no and just say it doesn't make sense. If it's AI and machine learning, sometimes it just doesn't make sense. AI machine learning is great. Okay, just toss the word AI onto it.
We call it feature theater, right? AI feature theater. Just slap the AI logo on there, like AI toothbrushes and whatnot. I understand the AI conversation fatigue. I'm interested in something more distinctive than that, a unique way of solving the problem. We're even helping some services businesses just to have a really solid integration stack. One of our clients is going to change the way auto glass companies manage their businesses. And another one that's really rethinking the idea around restaurant point of sale. There's so fun little things to innovate on in unsexy industries. I think there's a lot of opportunity there.
I think for me, at the end of the day, I'm looking for, is there a need? And then is there a product market fit? Is this something that I feel that I'm definitely a great salesperson? I know that for a fact, but one of the big secrets that I have is that I'm not really a salesperson. I just like linking myself to products that I would want to use and that I really believe in. Leaving AmeriQuest, I didn't believe in the product that I was selling at the end of the day. And after that, I didn't put people into any mortgage debt. That was one of the things that made me the top mortgage originator in the US for 2 straight years, which is definitely something to be very proud of because it's a very competitive industry. But when I look at everybody in the industry, at the end of the day, it's all about education, transparency, and setting expectations. So often that was what was missing from other people. And even what I found resonated the most was that telling somebody, okay, let's look at those. Here's how much money you're going to have at the end of the day. when you get into this mortgage. You might want to consider going back and renting, or you need to save up more money. This may not be the right property or the right place, et cetera, et cetera. You go into all the possibilities and make them really think. I would not want to be selling ice to an Eskimo. That's not what I do. Can I do that whole show me this pen? No, I wouldn't want to do that. That's not what sales should be, and that's why sales has a bad name. In so many cases, salespeople are being asked to sell something that doesn't sell itself, and they're being asked to overcome objections rather than the company trying to go through and solve for the objections. Listen to the end users and say, okay, and also, are we differentiated? Do we have barriers to entry? Why are we better than this other company? I was just at a great panel, and one of the speakers, a very big company in FinTech, I'm not going to mention who it is, and I thought I was giving him a lob, like, you are competing with more established incumbents. What is the moat and barrier and differentiators that is going to help you to win long-term outside of pricing? I know the company, I know their differentiators, I know their moats, and I think at the end of the day, that's where it seems like they're not leaning into what everybody likes and loves them for and what they really should be solving for. I think that's why they're listening to their clients at the end of the day.
I'm in the software development consulting space. We do software development, data science, and DevOps. You could probably throw a stone and find another software consulting company. But it's how I was talking to a buddy the other night, and he's sitting in a parking lot, and there's a dentist office on either side of the parking lot. I'm sharing this, like, this concern or just how competitive the software development space is right now. And there's two dentist offices. How are they going to differentiate themselves? Like, one of them is going to treat you super good as a client. I think it's about how you offer the service. How is your differentiation? If you said, I don't want to do a business because I don't want to be in a red ocean space. People talk about that, like, I want to be in a red ocean space. But yeah, if you have an amazing customer experience, you can be the biggest shark in the red ocean. I think it's super cool when brands like Chick-fil-A or just brands who even was super competitive, they got the customer experience right.
Yeah. I think that's how you communicate it as well. Your dentist situation, great, you take care of people, but how does everybody know that you take care of people? And how are you advertising that? Oh, we're on Yelp, we get great reviews. Okay, that's great, you have great reviews, but how are you getting the word out there? And what is the wording that you're using? What is the language that you're using? And is that really cutting through all the noise? Because there is so much noise today. I think that's where you've got to find ways to even innovate on that side. Yeah,
That's great. That's great. Super smart. People like what you've had to share today. How would you like them to connect with you?
LinkedIn's always the easiest and best way. You can see my background, my experience, who my connections are, what I've been endorsed for. Greatest way to get a hold of me is that. I try not to give out my email just because the last thing I want to do is get spammed or my phone number.
We'll make sure that your LinkedIn profile's in the show notes, and I just appreciate your time. Another closing question. If someone were to reach out to you on LinkedIn, who do you want those people to be? Who are you wanting to talk to right now?
I'm not looking for any services to be sold to me.
For sure.
At the moment, I would say if I end up taking a role, then that makes sense. I'd say really, I love talking to incubators, accelerators, funds, VCs, family offices. End of the day, that's where the money, resources, and capital come from. And that's where I can help out more people through one connection, is how I see it. If individuals want to reach out to me as well, founders or even leadership teams, I have to go through and work with them there. I'd say that's probably who I'd like to speak with the most.
That's great. Good answer. Appreciate that. Thank you so much for spending time with me today and appreciate it.
Thanks for having me on the show.